And so if you're willing, I'd like to ask you, Kevin Bupp, what is the biggest risk?
It's a great question, Darren, and I would say that if I'll take it, I'll answer it from an investor's perspective, and I'll use a reflection back on 2020, 2021, 2022, when rates were incredibly low. There was lots of transactional activity, lots of transactions probably being overpaid for, lots of risky debt that was put into place that ultimately didn't seem risky, but it had a timing risk associated with it. And if I don't execute this business plan, or if rates go up, or things that are outside of my control, if they occur, then my business plan, gets flushed down the toilet. Basically, doesn't work. And so I think being a disciplined investor, I think that's it. It's just sticking to the fundamentals have never changed, right? I mean, the fundamentals have not changed. They don't change when the rates go down. They don't change when the rates go up. We can all financial engineer a deal to make it look like it works on paper, but when the tide rolls out, which it has, now we're seeing a lot of what we were praising people for. Great job, great deal. They were buying it. Now tide went out, and now there's a lot of distressed deals because of the capital stack was a big risk. The timing of rates when they went to historical, I guess at a historical rate, they rose in a very short period of time. And so for us, it's just staying disciplined, being very disciplined with our buy box, looking at a lot of things and getting beat out in a lot of offers back when times were crazy and a lot of transactions were happening. We didn't buy a lot. We weren't competitive buyers. It was very frustrating. But staying disciplined to that allowed us to, and not skipping the fundamentals of, does this thing actually cash flow? Does this make money? Or is the only way that makes money is if the timing of the market works in my favor, and no black swan events happen, rates don't go up, they stay the same. Is that the only way I make money? And if the answer was yes, then we would pass on it. And so I think just sticking to the fundamentals, they never change, they never will change. Being honest with yourself, and just sticking to that buy box. I think that's how we avoid risk. We didn't grow like everyone else did during those couple of years. We grew, but not by gangbusters like a lot of our competition has. But that put us in a great position. Last year was one of our biggest year. It was our biggest year until this year, as far as acquisitions and new opportunities and deals that truly fit our buy box. But we were prepared, we were ready. We've never stopped distributions to investors. Our investors have continually received quarterly distributions on a regular basis, and so us mitigating that risk back during the heyday, when things are going crazy, allowed us to really capitalize and take advantage of the opportunities that have presented themselves now over the last couple of years. So, and I think will continually allow us to do so in the coming years. So, don't know if that's a good answer for you, but hopefully that, hopefully that's something.